tax day this year and to help you keep ahead of all the new rules in place and help you prevent having a conversation with the friendly folks over at the Internal Revenue Service. We are pleased to be joined now by Dr. Agustin Arbulu, President and COO of W Tax Group. Dr. Arbulu, thank you for being with us today.
You're welcome, Tyler. Just call me Augie. Please.
Augie, okay, I will call you Augie then. Augie, of course, as I mentioned, April 18th is the day that taxes are due to be filed in the U.S. this year. Can you tell us, as we're approaching that date and people are preparing their taxes, either themselves individually, using an online service, maybe going to a CPA, whatever the case may be, what are some of the common mistakes that people may make on their taxes this year that could get them in some murky water or at least having to do corrections with the IRS?
Oftentimes, it's really omission of income. It'll be either a W-2 or more likely a 1099 that they didn't include. You can get a 1099 for $5 that you interest you earned from an institution, or you get a 1099 that comes in late. Sometimes it hasn't yet come to the taxpayer. And by the time they file it, sometimes they file it early, it's not reported. And they just forgot. As you get older, people do tend to forget. Oftentimes, I will advise clients to take their time, maybe ask for an extension to make sure you have received all the necessary information to prepare your return.
And so, Augie, at W Tax Group, you and your fellow tax attorneys specialize in helping those who, for some reasons or another, may run into quote-unquote tax problems and have to make corrections or may run into some legal issues with the IRS in correcting those issues. What are some of those common reasons or likely reasons that someone may have received a letter from the IRS, and then at that point, where does the process start? What should their immediate next moves be?
First of all, there's an incredible number of people who have not filed returns. The estimates are well over 25 million taxpayers in this country that have not even filed their tax returns. The average number of years that taxpayers haven't filed average about 6 years. So oftentimes the IRS will eventually catch up. They'll send a notice, we haven't received a return, and what's going on. And taxpayers, if they haven't filed their returns, they'll put it away. And it's also common with individuals. There's about 37% or more of Americans or taxpayers who are unable to meet their tax obligation. That is, they file their tax returns, but they owe money and they don't have the funds to take care of that. So what you're dealing with are non-filers, taxpayers who file their returns and are unable to take care of their tax obligation. I always advise clients that if you haven't filed your returns for years and eventually the IRS catches up to you, you want to get compliant. And we can talk about what compliant means. For people who are filing their returns but are not able to meet their tax obligations, they can think about an installment agreement. There are financially based installment agreements and there's non-financial based installment agreements. The IRS tends to be pretty flexible when it comes to non-financial, meaning you don't have to disclose your finance to get into a payment plan. You just need to be willing to come forth and see if we can work out a payment arrangement that meets with the taxpayer's monthly needs, and they can cover that. So there's a lot of different aspects. Regarding the non-filer, that's a bigger challenge because the IRS policy is to work out something with the IRS, you first have to be compliant. And from the IRS perspective, the policy on compliance, meaning you filed your returns and you've done everything you can to stay current filing your returns, it's 6 years. And so for 2021, they're looking back to 2016 and forward that you need to get all those returns filed to be compliant. And if you owe taxes, after you become compliant, you get the returns prepared and you show you owe taxes, is to then do a workout plan with the IRS, some form of a payment arrangement. And if you can't afford the kind of payment arrangement they're seeking, it could be because your finances won't allow that. And in that regard, we come into play. We help the taxpayer put together their finance to see what is affordable, as the IRS calls it, determine what your monthly disposable income is.
We're joined by Dr. Agustin Arbulu, President and COO of W Tax Group, joining us on the MegaCast. So you mentioned getting compliant and then working out those plans for paying off whatever taxes you may not have paid back to the IRS over a number of years, upwards of 6 years or beyond. So if someone gets compliant, and if someone is compliant but they haven't paid their taxes and they haven't worked out a plan with the IRS, what are some of the numerous penalties or legal troubles that a person can find themselves in for not properly filing and then, of course, properly paying what taxes they may owe?
Right. What happens is that when you haven't paid your taxes, the IRS begins to send you notices, reminder notices. You owe this amount. This is what. Please make arrangement to get it paid. And oftentimes people will ignore it. And then you get another notice, and then you get another notice. So there's a series of notices that the IRS sends out, each one getting a little more aggressive. To eventually where they will say, hey, this is your last notice. You got in the next 30 days, if you don't contact us and you don't make arrangements, we're going to levy you your account. We're either going to garnish your wages, we're going to take some action. And so the IRS has a number of tools available, from filing liens on property to levying, going after your bank accounts, garnishing your wages. And the last thing you want, if you are W-2, you're employed, is to have your wages garnished, because then it becomes a little challenging to get them removed. And the amount that they can take from a paycheck can be substantial. So you really do want to respond as soon as possible and seeing someone a professional that can help you work out those issues with the IRS. It's important. A lot of times people say, well, I can do that on my own. It's intimidating. It's scary for people to deal with the IRS. So I always advise them, get yourself a tax professional who specializes in working with the IRS and working out and resolutions for a tax individual taxpayer.
Augie, another serious issue related to taxes is, of course, tax fraud. What are the more common types of tax fraud that is encountered by the IRS or in interactions between the IRS and taxpayers or agencies that may be paying taxes, such as businesses? And is it typically bad actors who are committing a fraud on purpose, or is it simple mistakes that people are making that add up over time and get them under scrutiny by the IRS?
Well, simple omissions can be explained, but if you are omitting income and your lifestyle does not reflect what you're reporting, then there's an issue. That's on the one hand, that's sort of an omission of income, that you don't report all the earnings that you make. But in today's day and age, with communication and technology the way it is, you're going to be able to decipher how much you're making. And if you think you're not, you're kidding yourself. The IRS has tools available to figure it out. They can access your bank accounts. They can look at your lifestyle and how you live. Is it way above what you're reporting? So that's an income omission issue. Then, of course, you have other people. A lot of times, businesses will report excessive expenses as a way of reducing what their taxable income is. You have to be prepared on both ends to substantiate how much income you really make and how much expenses, those expenses that you're incurring. And too often people get lax and ignore both sides of it. Report what you have earned, that's reportable taxable income, and substantiate the expenses. The IRS will, at times, I've seen it often in the number of cases that I will deal with, that they forget to provide that substantiation. If you've got alimony that at one time was deductible, we'll present the checks, present the proof that you've been making alimony payments to your former wife and you're deducting it, or other expenses, business-related expenses that you can prove. And those are the kinds of areas that you have to be careful about. And if you push it too far one way or the other, then you get into the realm of maybe fraud, that you are purposely evading from having to pay. If it's an honest mistake, we call it an honest mistake. But then you get to those individuals who think they can outsmart the taxing authorities, and I say that's virtually impossible to do.
Yeah, you want to do what's best for your bottom line, but you have to keep it within the books. You have to keep it within the letter of the law in order to take advantage of those benefits without trying to take advantage of the system, which can get you in legal trouble. We're joined by Dr. Agustin Arbulu, President and CEO of W Tax Group. You can learn more information on their website, wtaxattorney.com. That's wtaxattorney.com. Augie, back to just the average daily person, and on some more of a positive note, as people are filing their taxes this year, what are some of the common deductions that are often left on the table, and some deductions that are available this year that regular taxpayers like myself that may be filing their taxes, filling out their taxes, may overlook but be able to take advantage of?
Well, let's remember, we have a very generous standard deduction. At one time, you could be able to itemize, if you remember many years ago. But over the years, they have raised the standard deduction that it's very difficult to itemize your expenses to exceed the standard deduction. So I always tell the client, just take your standard deduction. But then there are credits, charitable contribution. I think there's and I'm not a tax preparer, and we can talk about the differences. I'm more about tax resolution. But in terms of some advantages, you've got earned income credits. You have a child tax credit. If you have children that can qualify, you have the charitable contribution credits. So there are credits out there that are available, and you want to take full advantage of those that exist based on where you are income-wise. And for example, like charitable contribution credits, I think you can do, if you're married, up to $300 or $600, and you don't have to show any proof on that. That's automatically given to you.
So, Augie, you mentioned as you were answering that you as a tax attorney, you work primarily on resolution of tax-related issues, whereas there are those that may work on both resolution and preparation. So what is the difference between those agencies that and what they can do in working on resolution versus preparation of taxes?
Well, every year we have to prepare our returns. This country is built on voluntary disclosure and filing of your returns, as you know. And so you have to prepare your returns. I always advise people, get a professional to prepare your returns. Don't do it on your own. I can't tell you how many cases I get with people who will tell me, I asked them, did you get your tax return was filed? Yes. Who prepared it? I prepared it. Not that TurboTax is bad or another software is bad, but you need a professional to be able to make sure all your deductions are in order and you are able to get the maximum benefits from having it properly prepared and filed. So that, to me, is number one. That's what tax preparation is all about. You have to have your returns filed before you can address issues that could arise from the fact that you filed returns the IRS is challenging. A lot of times they're challenging because you've omitted some income or you're claiming some expenses that they want you to provide evidence of those expenses. So let's do that. And I think that in this country, most people will aim to have all that supporting document. But for some reason, taxpayers, when they get that letter from the IRS, they ignore it, or they don't take the time to really carefully look at what the IRS is asking, respond to it timely. That's about tax resolution. That's about resolving challenges, push back with the IRS. And they understand that. And if you provide the evidence, you're going to be in a more strong footing to be able to claim the deductions or ensure that you're not paying any more than you need to be paying the IRS or any taxing authority.
Augie, just a few more minutes with you before we say goodbye. Any other tax-related issues that we haven't touched on today that would be important for our audience to be considering at this time as we approach April 18th?
Well, if we approach April 18th, I always, as we're getting older, I always say, have you gathered all the necessary information? And if you're not sure, you have the right to seek an automatic extension to October 15th of the year. Take advantage of it so you can calmly make sure that you've gathered all the information you need, both on the income side, on the expense side, to be able to go to your tax preparer and have him or her put together the returns for filing. That would be something that I advise clients to do. And if you get a notice, if you get an IRS notice because there's an income discrepancy or they're asking for substantiation, don't ignore it. Get yourself a tax professional who can advise you, walk you through that. The last thing you want is to ignore that, because that's where you have opportunities to cost you less in terms of addressing what the IRS is seeking, as opposed to later on you're trying to reconstruct things. And a lot of times taxpayers can't do that, or it becomes too late and you can't challenge the claims of the IRS because you never challenged it in the first place.
Augie, thank you so much for joining us.
You're welcome, Tyler. Thank you so much for having me.